Yes, generally speaking, anything like that you can claim as a deduction for income tax purposes, yes. Yes, if you have an employee, you have to deduct what's called PAYG, withholding tax from their salary, and you have to pay that over to the tax office every 3 months, and that would go on. If you're registered for GST, you'd be sending business activity statements to the tax office anyway, and that would be just part of your business activity statement. You'd have to put their wages down that you paid them for the 3 months. You'd have to pay the tax that you've deducted from that person's wages to the tax office every 3 months. Well, what happens is when you lodge your income tax return, you get sent a notice of assessment by the tax office which tells you how much you have to pay. They give you a certain amount of time to pay. If you don't pay, they'll probably contact you again, or with a view to negotiating some sort of payment schedule. If you don't negotiate anything, they will eventually take you to court, and they'll get their money somehow. If you don't want to lodge an income tax return yourself, you can go to a tax agent who will do it for you, and one of the benefits of doing that, of course, is that they know all the tax rules and tax laws, and also they have a provision where they can delay lodging your tax return until the middle of the next financial year. Well, it depends. It depends whether you're deemed to be resident in Australia or resident abroad. If you're basically going for a year or so on a working holiday, for example, you'd probably be deemed to still be resident in Australia, and therefore you would definitely pay tax on all your worldwide income. But there are treaties with overseas countries so that if you pay tax in those countries as well, you can offset the tax you pay in the other country against the tax you have to pay here. However, if you're basically going abroad for an extended period of time, because, for example, you want to work in another country for a number of years, you may well be deemed to be non-resident in this country, in which case you'd pay income tax on any income that arose in this country, but any income that you earned in a foreign country would not be taxable here. But of course you may well pay tax in the other country under their income tax laws. Quite probably you would pay tax on any prize or grants you receive because you are in the business of being an artist. Generally speaking, if you're in the business of doing anything and you receive grants or prizes or anything to do with that business, it would be taxable income in your hands, yes. Capital expenses are where you buy something large, like a photocopier or some sort of projector or something which might cost a few $1,000s. Generally speaking, normally you can't claim that as a tax deduction, but there is a rule which says that anything that costs under $6,500 for this particular tax year we're in now can be claimed in full and be claimed as a deduction against your assessable income. Your assessable income is your sales income, and therefore it can reduce your taxable income on which you pay income tax. If it's over $6,500, what you would do is you would be able to claim a certain amount per year until it's completely gone, the whole amount. It would be 15% in the first year and 30% in subsequent years on a reducing balance basis. So you take whatever was left from the first year, then you get 30% of that, and then the next year 30% of that and 30% of that as a deduction. But as I say, if it costs you say $4,000, you could just write the whole lot off in one go and claim it in one tax year. That's if you're a small business, which is defined as being that your sales are less than $2 million a year, which of course when you first start being an artist they probably would be. No, there's no limits. In fact, you can end up with a loss. And many people that start out in their own businesses in the first years do make losses. And the loss can be carried forward to the next tax year and offset against any income in the next tax year as well. So there is no limit. No, that's the answer.